everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow is going to be the 28th, rounding out the end of the month, end of the week, and just, a pretty slow day today, all things considered, if you ignore the euro. The euro, obviously, the best market today with just phenomenal movement overall. Now, this movement that we're getting so far on the euro has been just nothing but up. Everything else, for the most part, a little bit choppy, sloppy. The S&P finding some pretty good trending towards the end of the day, but yeah, for the most part, it's kind of a slow, choppy day, so you got to play it a little bit by ear. Now, before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up so we can send you a message every single time one of these videos comes out. Along with that, in the email, we talk about all kinds of different stuff, from stocks to cryptocurrencies. You name it, if it moves, it's going to be in that newsletter at some point. So it's a really great one to have sent to your inbox. And along with that, at the bottom of the page, don't forget to check out the blog. We have two different posts that we make every day. One right before we open up the live trade room, and that is going to be the live trade room morning prep. Those are all of the major levels of support and resistance for that day that we're keeping an eye on. And then, of course, afterward, we go over either a trade of the day or we look at the market psychology. Either way, just looking to grow our kind of understanding of the markets every single day. If you haven't done so already, make sure to check out the live trade room subscription and trial info in that area. That will let you sign up for a one-day trial of the room. You can see what we're all about, sit down with us in the live trade room, and just kind of see how we handle each and every day. It gives you a really good heads up and kind of a view into our world and what we're doing every single day, and it's kind of a cool way to sit down and chat with us and, just kind of hang out for a day. So if you haven't done so already, make sure to sign up for that one-day trial, and we'll see you in the room. As always, of course, if you do enjoy the room, you can sign up for it for a weekly or monthly subscription, and if you join as a full-fledged VIP member, you get the room as part of the package. Now, taking a look at the euro, might as well start with the big boy. We have a big move up today, huge rallying right after 4 o'clock with just a non-stop push to the upside. And this is a great example, like we talked about in the market psychology video today, on why you do not step in the front of this kind of market. It is not the type of scenario you want to put yourself in trying to go against this. It's kind of like catching the throwing knife, right? It's going up, so throwing knife, I guess. You do not want to go against this kind of trend, trying to pick the highs, trying to pick the lows, etc. You're much better off just buying the dips, let it go back to the highs. Buy the dips, let it go back to the highs, rinse and repeat. Now, after we have such an extended trend to the upside, it's very likely that tomorrow is going to be nice and slow, quiet, calm, collected, while the market kind of figures itself out, right? All of a sudden, we've gone up from 1.12300 to above 1400s, right? We need to kind of figure out what's going on now. What's the future look like, right? So the euro market likely is going to have a little bit of a slowdown going into tomorrow, just due to the fact that, well, it makes a lot of sense. Now, there is some news for tomorrow that may kind of throw a spanner in the works for that one, but for the most part, the anticipation is that it goes pretty slow. Overall, looking to buy pullbacks and the assumption that we will start transitioning into a range as the market calms down a little bit. I'd love to start buying it around 13,777. If we can get a good pullback down to around 13,444, I would be a happy camper as well. Overall, though, definitely not looking to buy high anymore. I want to buy the dip and stay away from the highs, just due to the fact that there's probably not a ton of upside potential anymore for big breakouts. Over on the gold market, for the most part, kind of giving back most of what it did in the morning session. We opened up right here, and we are going to be closing now here, and that's after it cycled down, cycled up, and now started taking quite a bit of it back. We are holding major 60-minute support at 1246.4. We have a little bit more 60-minute support below us at 44.3, and we are also forming a little bit of a wedge. Now, the wedge that's forming here, it's kind of coming off the backs of a little bit of a head and shoulders pattern. We can see the left shoulder, head, right shoulder, and kind of dipping lower. And a lot of times, a head and shoulders pattern is nothing more than a type of continuation. It's just telling you that don't buy up here anymore, buy down here, right? Buy those cheaper prices for that rally back to the highs. So because of the head and shoulders pattern telling us that we should be going long but on a better price, we are also seeing a little bit of a wedge, and the overall trend is up. I would like to see buying pressure on 46.4 down to 44.3. Resistance above us at 52.1, so it is an area to be slightly concerned about, maybe some profit taking going on there. But if we can get a breakdown below last week's support at 41.7 even, that would be even better, putting us in a longer term position to buy into. But overall, looking to buy in the bigger picture for a rally back up towards the highs. Over on crude oil, we have a relatively decent bull trend with a big breakout move right around 10 o'clock to the upside. Lots of bullish momentum in here. They did get a pretty stiff pullback down to 44 for a retest, and since then have kind of tried to go higher, not been doing so well, kind of pulling back a little bit. We're starting to see a little bit more of that chop that we've been seeing arguably all day, kind of setting back in again. Lots of up and down today on the crude oil market. We go up for a little bit, we go down for a little bit, with a general trend to the upside. And a lot of that choppiness, it does make me a little bit nervous to want to hang on to positions too long. One thing that really does stand out as a possible channel high, we can see pretty clearly that they're holding this channel low down here. They broke above it. They did hold initially, but when they broke above it, they used it as support for a little bit, then resistance, and now we're starting to deal with the cross point with the top of the wedge and the top of the channel coming into the same place, and that may lead into a much deeper pullback where we can then look to buy in at slightly better prices. One thing that also stands out here is that we have an overall channel, and that channel has broken above the top of it by quite a bit. That's not a small breakout. And a lot of times when that type of scenario happens, you end up seeing the market pull back to the lows of the channel and then breaking down through the bottom with about the same distance that it broke to the upside. So I'd be looking for about an equidistant breakout up as I would be down, and that would put us with a little bit of support down at those earlier swing levels. Either way, though, looking to buy on the pullbacks. The first pullback area, 44 even, 43.97 just below that as well. And then if we can get a little bit more push to the downside, we do also have 43.84, and then way down at the discount section, we've got 43.56, also offering up a potential buying opportunity if it pulls back far enough. So still leaning on the buy side, but with a little bit of guard, right? We want to see some slightly better prices before we go jumping on into crude oil now. And then finally, the S&P. The S&P showing a very nice wedge bottom coming into play, and they hammered through it. Use it as resistance, and then push down. Major objective to the downside was a retest of monthly support at 24.17 and 60-minute support at 24.18. And this is a good point to bring up where, once again, we are coming in towards the end of the month. And as we near the end of the month, those last month levels, those prior month levels become stronger and stronger and stronger. Because now they're fighting over, you know, where is this month going to be a bullish month? Is it going to be a bearish month? Is it going to be a neutral month? They're starting to really get into a fist fight on over who owned this past month. And the closer to the end of the month we get, the stronger those levels become. And you can see that bounce was no joke right there. Now, but they did also complete a major objective, so likely a lot of profit taking. One other thing that does stand out is maybe the potential for a 3-push wedge bottom that all came into the same place. Either way, though, we are getting a correction, and that corrective phase is telling us that we need to wait for better prices. We don't want to sell way down here anymore. We're probably going to cycle into a range. And with that potential range cycling going on, I'm anticipating seeing some selling pressure higher up, 24.27 even, 24.29 half, 24.32.75 if it starts really lifting up, and then up to 24.37 if it goes into a full-blown range. We saw many times today that area held as resistance. If we get back up to there, I would honestly be a little bit surprised. But that said, the market can be full of surprises sometimes. Overall, though, looking for the big one, the hot spot that I'm keeping my eyes on, 24.27, for another selling attempt down to those lows if they want to try to take over. So that's going to do it for the outlook. Now, in terms of the news for tomorrow, like I said, we do have quite a bit of stuff going on. Tomorrow at 9:30 in the morning, we've got a bunch of speakers hitting. We've got the Bank of England Governor Carney speaking at 9:30. Out of the UK, out of Canada, we have the Bank of Canada Governor Paul speaking, and then out of the Eurozone at 9:30, all the same time, we have ECB President Draghi speaking. So tomorrow, right at the Stock Exchange Open, you'd think they would have picked a better time to do it, but right at the Stock Exchange Open tomorrow, we have a boatload of big-name speakers hitting the microphone, so we need to be very careful going into 9:30 tomorrow. 10 o'clock, we have the pending home sales for May, forecasted 0.8%. The previous was actually a negative 1.3%, so they're forecasting a little bit of an increase there. And then, of course, tomorrow being Wednesday, we are also going into crude oil inventories. Forecast for tomorrow's inventory is negative 2.585 million. The previous was negative 2.451 million. So very similar from forecast to previous. The API numbers will be coming out here in about 10 minutes or so make sure to grab those for a little bit more of a heads up. But outside of that, that's going to do it. So with all of the speakers hitting tomorrow at 9:30, we really have to be careful. And like we always say, make the plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.